Hey, good morning, guys. Happy
Well,
Monday. How's everybody doing? What do you need? You need a host?
it does the fireflies, otters.
Oh, yeah. Okay. Yeah. Let me see. I think I can. One second. Where is this thing here?
I know it's spring break with the kids. A lot of folks are home. So thank you for joining.
And I do think there's a way in the settings to not allow them to come in, but I think you have to be a host, but there is a button you can click.
That's a good point.
It's funny, when you don't have kids, you have no idea about spring break. I had no idea it was spring break.
Yeah. So this week and here in our city, it's next week is the spring break. So I know we would probably get in the similar boat soon. Like, oh, don't
Yeah,
care
and I
about
guess
spring
it
break.
is a lot because someone I had an appointment with that couldn't do it next 2 weeks from now because they were on spring break in Austin. So
Well, I'll take a look at it. How to do change the Zoom setting. Okay, we'll kick it off in 4 or 5 minutes.
Okay, I think that's everything.
Okay. All right.
Wow, yeah, a lot of people on spring break, I guess.
Uh, I'm sharing my screen. Let me know when y'all can see it. Oh, thank you, Nancy. Hopefully y'all had a great weekend. Let me it's gonna go up. So again, I think we're almost done saying that as a broken radio. This call is only for the inner circle and massive masters. And the inner circle definition will expand a little bit more. So we'll talk about it as we kind of go. And then let's go and talk about the markets, CRE. There's the Fed meeting coming up in about a week and a half. We don't expect any rate to change. Same for the next one. So we're not expecting any rate changes for next two up until June, July. We're expecting one. By that time, hopefully we'll go through that job cuts and a bunch of other stuff. That's the plan. So at the end of the year, I think there's two cuts potentially. At least we're on the side of two cuts in Q3, Q4, potentially as you kind of go through. What it tells us for underwriting, higher for longer, it is what it is. We shouldn't expect much of a change. On the flip side, that's on the rate side. Now, on the treasury side, it dipped a little bit. So some of you guys may have some phone calls last week. Brokers call every time it dropped a little bit. So I think that call will stop this week. But the treasury has dropped from what we had in January, then February, and then March. So our hope is that the rate stays constant, treasury drops as you go through. I think once the treasury drops close to, at least close to what we had, close to or less than 4, we'll be in a decent spot to see some of the transactions, some of the refi to kind of kick in. So for us, rate matters, but also treasury matters. As of now, rates, we don't see much of a reduction, but on the treasury, we're expecting some reduction as you kind of go through. That treasury reduction will probably happen earlier than the rate. That has an impact to some of the terms that we get for multifamily. For the banking terms, they don't move as fast as agency will move, but we're expecting to see the lending being readily available, and equity is going to be the tide for now, Gio. Sanjay, you want to add anything to it, or are you good from
Uh,
that?
yeah, just a couple things. If you go back to that treasury chart, if it goes to those September levels, which is where the market expected based on the rate cuts, and then those rate cuts happen, it's another 0.5% decrease in the overall rates for our deals for us. So I think just our opinion, as the economy continues to roll out for this 2025. I saw a couple of reports last week. The housing market, which we are in the second week of March, where the spring kind of sale and activity kicks up and you start to tick up. I saw a couple of reports is showing not as big of a tick up or not at all for some markets. The biggest thing is that this market seems very, very divided, meaning certain areas are really hot, really going. So those pockets are there, and then certain markets are, extreme in terms of inventory and pricing and on all those things. So the operator becomes that much more critical now with underwriting, the due diligence, and everything else. So now it's a good time for all the any deal that works now, I think will work for whenever. So it's a good time, but sellers' expectations are not adjusted, or the sellers just can't afford to lose or take the haircut that the underwriting kind of points to. So from that perspective, it's been a little hard and a lot of deals to underwrite, but anything works now, it's going to be good. And the operators' skill sets are the key. So yeah, back to you, Shar.
Thank you. All right, let's go back to, okay. In between, I haven't seen any major news over the weekend. Only thing is the Canadian Prime Minister, new one, and it's gonna push back more than Trudeau that we had for the tariffs and things like that. So we had three concerns, which is the Latin America, Mexican, the president, she really navigated that pretty nicely. Now Canada, that's a push and pull going on, and it's gonna be interesting to see what happens. And then we have the US China, but US China here to stay. Mexico is out. I mean, that tension is gone. And so the Canada is yet to see what happens. Probably he's a new guy, so he's going to come back and push back quite a bit. So we'll see how that kind of plays out. Either way, inflation will stay a little bit high for now. We don't expect that to go up, not because we flooded in more money, because of cost of goods gonna go up. And then that's where the inflation will kind of kick in. All right. So the interest rate forecast talked about it, debt available, planning for 25. We are in a Q1 now, about to finish. We're in the Q2 and 3 and 4. Q2 and 3 transaction will be a little less. Q3 and 4 we're expecting quite a bit because of the push. Another chatter on the it's that depreciation may come back. We don't see any legal work that being pushed through. And I was poking around to the Fed website, just any of the bills that being pushed through. But there is a chatter that may come back. If that were to come back and Treasury were to go down, then we'll see quite a bit of transaction in Q3 and 4. All right, equity sentiment, it's very similar to 2024. So one thing that is becoming real, I was at the BEC 2 weeks ago, last of our conference. It's a middle ground, not too many new people, not too many senior partners, but there are a handful of senior partners. But most of them are active, this is, I would say, a retail version of NMHC. Retail means NMHC is sophisticated, lots of lenders, lots of fund, lots of bank, and everybody's senior. And then that best of a conference is a step down a little bit more relaxed and chill. So we spend quite a bit of time, and a couple of things that is showing up, that return on effort, it's a big deal. That means the amount of time it takes to raise whatever that we have to raise, take on a deal, and everybody's underwriting very tightly. So, which is an interesting part. I like it, if you ask me. That keeps the new noise out of the system, and so that also keeps the market clean. What I meant to say, that our hypothesis about we have 6 to 9 months for noise to kind of show up in the marketplace, that it was validated 2 weekends ago when I went. Noise, what I meant is that when someone comes in very first, all of a sudden they think they can do it all and pay really high on the price, and makes the and then kind of changes the trajectory of the pricing. So that noise has been tapered down a little bit more. So long way of saying, still there is a clean path from now till Q3 and 4. At the same time, I have seen quite a bit of operators are back. And what I heard, some of those dinners and lunches that I went to, hey, I was outside, my pencil was down for the last couple of years. I wanted to go take my portfolio through. Now I'm warming up my pipeline to get to that. And I have seen that as well. So a lot of the senior players will come in, and then as you kind of get talent of the year. Yep, transaction more to happen. So the capital raising will be more important as we understand the deal, which is I'll keep mentioning that. So if you are thinking about being an asset manager, if you are thinking about being an underwriter, you have to build in the muscle of equity raising. And by design, you just have to do it. Only asset management and then only underwriting, it's not gonna get you there. So you gotta have this arm of equity raising. So we'll talk about Mike's call. So make sure that you show up to the Mike's call, get your pro money set up, get the website set up, get those things in place. So when the time comes, you're a little bit ahead of the 8 ball. All right, outline as we are going through that. Okay, a couple of things. What we saw that Office still not good, and Office Class A, it's good, like a Class AA. It's really great, which is newer than 2010, newer than 2000. Houston office, it's a very soft market, depending on where you at. If the office is not Class A and/or an address you want to have, we can have a tough time. Oil and gas, going back to the full-on office. Again, the issue with the oil and gas is we have 980s, so we don't need that many offices as you go, and every single oil and gas company, they're shrinking. So Houston office, we went into this slump earlier than everybody else. Now we are coming out, but slightly differently than the DFW market. Flex space, retail space still going good on the suburbia Class A location. Value add, I haven't seen that many transactions to happen. The big box industrial warehouse, that's kind of soft. Multifamily, sub 10, sub $12 million are still transacting. And value add C are getting through a price adjustment as you go. That is there. Carolinas, I'm seeing still quite a bit of push. And for some reason, somewhere in Oklahoma City, Mississippi, Missouri, and Louisiana, there are quite a bit of deals are showing up. I don't know what the cap rates are, but it was interesting to see they are trading quite at a higher volume than Texas market. Is Mike here? I don't see. Okay. So for our pro money, every Thursday and weekly on Saturdays, please get your pro money and kind of get settled. For some of the massive masters, we had Client Harbor. We are moving over everything from the Client Harbor to the pro money, and you'll see Rimsha reaching out to you, talk through the transition and transfer, things like that. So Client Harbor platform, we're shrinking from our side of it. We're nudging over to pro money as you go. This one, we have two vendors lined up, and we just kind of get the aligning the schedule as we go. But for now, we're not trying to add any more phone calls into the mix because we have quite a bit already. But we have architect and civil on hand. Every time we need someone, we can kind of go to them. Equity raising activity from us, from the platform side, we have a couple that is going on. I know Chirayu, are you here? So like a quick update on yours and how's that going?
Yeah. Hi, Shreya. Hello, everyone. So this is for Vale Apartments. We have a few webinars lined up, but the webinars that are working are the ones which are one-on-one with the prospective investors of Capital Raiser. Soft commitments have started coming, so that's a good sign. And the PPM and OA documents will be ready as early as tomorrow. So then we can start funding those activities as well. Thanks. Over to you.
Thank you, Shirayu. Then we finished Candela, Horizon. There's a fund of fund that we're testing it out. And thank you for some of you guys who are practicing on Horizon. So practice on top of whatever that we have. CB Stewart, we had it under contract. We had to let the contract because seller had a bunch of family issues. But we've been working to the seller now. Now we'll probably go back into the contract. As soon as you go back into the contract, it's gonna escalate quick. Exactly when do we go? Don't know. I know I'm saying 2 to 3 weeks. But I know as we find out more, we'll let you guys know. It's gonna be 2 phases. Phase 1, we close the land, go to the entitlement process. Phase 2, we do the full-on syndication, given the speed that we need. Initially, seller wanted to carry about $3 million onto this deal, but seller dynamic have changed. So she's not gonna stay in, so we'll buy the land and then we'll allow more time to raise and finish the fund. That's why we went out of contract, now we're trying to go back into the contract. Let me go back, lead trackers. So that's Fate, that's Candela, and that's Lake Creek. This Thursday on the asset management call, we'll talk about Georgetown a little bit more. That's some of the decision we're making from the asset manager and why and the backings. So you'll get a pulse of that. And also that may be equity raising, I'm not sure. But join the Thursday call for the Georgetown, especially decision making on the asset management side to go from entitlement phase into construction phase, what we're looking at, and how we're looking at, and how we are calculating some of those risks and put an economic value, and then deciding to move forward as you go. So from the deal flow perspective on the contract we have done, and then Sanjay, any update on the BlackRock RV Park? I'm not sure it's Martin here or not. You're on mute. Sanjay, you're on mute.
Yeah, I think Martin was waiting for one counter, and then he's shopping for the lenders and the financing right now. So
Okay.
there are a few options that are going, but exploring that. But I think he's got the agreement on the price a little bit below 2 million there.
Thank you. So that's gonna be this is an existing RV park plus an expansion. I believe they have 60 units now, or 60 parking spots, and trying to add 40 more. That's the model. All right. So any other LOIs outstanding, Sanjay, that you want to share with the team?
Yeah, so I think we can kind of share this news here. We have the assisted living. For assisted living, there is a assisted living management company that is being stood up. So there is some good progress on that. Yulia and Andy Burt, they're masters here, also big dogs. They are, in contract to purchase 3 facilities here in DFW area. So, so with them, there is a assisted living management, which is typically the hardest part of those type of deals, that is being stood up. And as that deal closes, which is likely the end of March, early April, that will start to move forward and happen. So on assisted living side, as all of you have seen, or mostly all of you have seen during our 3-day presentations, that assisted living, it's a huge opportunity for the next couple decades, if not more. So there is a lot of demand and a lot of opportunity. So that's progressing. I think we'll continue to provide that update, and that will go.
Okay. So thank you, Sanjay. Just a little bit more, right? So we saw this assisted living and the asset management as a part of this purchase. They're trying to buy, they're buying a business, existing running operations, and 3 assets. Once that gets settled, our platform has a business where anybody can bring in their assets, and that could be a part of the process to run the whole value chain as you go. So Sanjay, thank you. It's a big kudos to you, and also Linda. I'm sorry, so a big kudos to you and the rest of the team. It was a lot of work on the back end, a lot of going back and forth to get to the place and get to the place that we're at. Initially, I think it was just a business. Then we had to separate out the assets from the business itself. Then we negotiated the business and we negotiated the price of the assets, and then we combined them together, which is being executed right now. Okay. Good. All right. New construction. I think we looked at one of the deal in DFW area. What we saw that the footprint of the retail space, sometimes it's too small to get into the market today. Right, Sanjay? So what was the footprint for the Dallas property that
yeah, so this was one of the master here, Alex, had the connection with the owners for a land in Flower Mound. So we were looking at that one, And one of the engineering assessment we got, they thought that it should be able to fit 10,000 square foot on each lot, and there were 2 lots, so that would be about 20,000 square foot. But the lots were a little odd shaped, triangle shaped lots. So then we had Realty One do some assessment and look at it, and as per them, the 20,000, 10,000 on each lot would really be the max. So they didn't think we could fit that much. And being the odd shape always makes it hard to lease. And while looking at the market from a leasing and construction cost perspective, surprisingly, leasing was a little softer. On new construction, retail, unless the new lease rates are, north of $30 per square foot annual triple net, which means triple net is on top of that. So it's, 30, 32, it's a little hard to make it work. 29, 28, you could squeeze in a few things if there is not a lot of land prep, which was the case in this scenario. So a lot of the comps we were seeing, it was a tight deal from that perspective. And then you get into it and your building footprint squeezes to a lower amount, then your cost goes up, right? Overall cost allocated per square foot goes up because there are certain fixed costs. So looking at all of that and considering, I think we end up saying that this is just not it doesn't make sense numbers wise to do anything with that one.
Thank you. So the market, again, we're tightening up based on the footprint and the retail rent rate where we decided to kind of pull that out. On that note, the good part is the structure of the deal was seller will come in with the land as a JV partner. Then Alex will coordinate the loan, debt side of it, and then we'll do the construction. It's a value chain. Equity, debt, and construction lease up all was stacked together side by side. So value chain perspective, that was a really good exercise for us to know. And the odd size, what he was talking about, it's a triangle size, not a rectangle or square. With the triangle edges are a problem. By the time I get to the building footprint, it's too small. And we thought we're not going to get anything out of it. If we do, we have to do a 2-story. 2-story doesn't work for the office today. So we said, hey, it's too risky at this point. We're going to pull back out. Thank you. We talked about assisted living, other asset classes, and I saw some of those LOI was going back and forth on the mobile home park side, and also decent amount of activity on the triple net side. So good job on those 2 categories. Now, I don't think so anything has been settled to a LOI or PSA yet. That's about it I had from the tracker perspective. Is there anything else to add? Cancun. What's the date for Cancun again? Please, Cancun.
Save the date for
Save the
Cancun.
date.
As new final details should be coming out this week or next week, early next week, but it's the May 7th to 11th is the dates. Sure.
May 7th to May 11th.
Yeah.
What?
Are you able to add anything here?
No, I had that account transfer. That's I was texting you earlier today.
Okay, yeah. So let
Otherwise,
me
I would
add that
add
here.
that. Thank you. So yeah, a couple of
section?
organizational, right? Just put a number 5 or number here to the organization update. So May 7th to May 11th, that's gonna be the Cancun trip. As a part of the master's fulfillment, we'll do mastermind, hang out, do some bunch of other stuff. More to come on that one, but please block your window as you go. There are a couple of updates. We have one of the great news, one of the fantastic news. Some of you guys may have worked with Candice Starnes. She is living in Massive Capital to join a Canadian family office to help them set up their an equity structure there. That's a large family office. I think it's a 2nd generation family office. They have around $500 million worth of equity that's going to float around. As a part of the engagement, we always say, hey, and our role is to be the wing underneath the wing, so you can build a resume and they can go to another spot. So starting, I think it's 10 days late news on the 1st of this month, she left Massive Capital, joined the Canadian family office, and she'll be working with the Canadian office to raise debt and equity for their deals. And we still have the line of communication where if any of those deals that they are looking at it fits our bill, or some of the deals that we take a look at it fits their bill, she'll be the conduit as we go. That's one news. Second news, it's Candace Major. Trevor, you want to talk a little bit about Candace Major? How that's going to work?
Sure. I spelled Canada wrong on my Canada A comment. Like, it's pretty sad when you can't even spell your own countries. Anyways, yes, so Candace Major, and again, if you've been part of the big dogs, and then Masters will be able to join, I'm going to be helping out with reorganizing, revitalizing Candace Major. We're going to start doing coaching calls on Monday at noon. And then we'll be doing a few more meetups and different trainings. And we're going to go through the two paths of, actively passive and actively active, and help people guide themselves through. It's a really good place for people to learn some of the beginning basics that they may have missed. And we'll obviously be providing lots of opportunities for investments, networking, all kinds of different things.
Thank you, Trevor. And that is part of the Big Dog organization. That is also our database to raise money over time. And we are working to make sure that an engagement rate and the participation and education is there. So just want to kind of share that as a part of the equity raising process as we prepare for Q3 and 4. We are also looking at that and a workflow to make sure that we're ready when the market turns. Those are the two. And the last thing, some of you guys have worked with Maria Marks especially for Cashflow Portal. All things Cashflow Portal goes to Riza Dakuli. She has been with us for a while. So if you need some support from the Cashflow Portal, your account setup, things like that, please reach out to Riza or reach out to Mike. We'll coordinate via Riza. And Maria Marks, she has been working with us for almost 3 years now. And she is another move. She is moving out of Massive Capital, and she's starting her own thing and raising with Maria as well. So those are some of the big movements that we had, and we're really happy that the learning, the resume, the know-how that we're able to add onto all of our partners, and they are going out doing their own thing. Maria have done 17 syndications, right, with us. So she has been the whole rodeo 17 times, so she knows a thing or two. But for now, she's going to stand on her own ground, and she's going to work with other platforms to raise money for her, and happen to be, and hopefully the money will come back to us. So we are kind of putting our people as we kind of go through, so that we get ready for Q3 and Q4 for raising and things like that. Sanjay?
Can I add a comment?
Please.
Candace, she's really such a bright star. The comment she had was from when we had the call with her, a month and a half ago, was she talked to this family office and they said, we want you to do this, this, this. And she bursted out to them like, yeah, that's what she's been doing with Massive Capital for 2.5 years. And she's been preparing for what they're asking. So it was everything she went through, the process, what she learned, and where she is now. I really think she's set up in a really, really good spot, really good group, really a lot of positives there. So really excited for her, and I think was happy to hear that everything going through the process. It's a grind day to day, but when you hear these things, that grind, got somebody somewhere, always feels that good, and a little sit back and you can enjoy that. So that was good for Candace, and I think Maria is sharp. She's gone through a lot, so she'll do good things, a lot of good things there.
Thank you. And this is not the first two. We had two other folks came from our organization, and they went outside and did their own thing, and they both have very successful life. The client, one of the tech company that we talked about, Ramiz, we started here, then we did a reverse carve out from the M&S side, and then he led the whole thing, and he's doing great as popping contracts here and there. Pretty continuously. So almost we have 100% success. Anybody who came back from us went outside. The resume really stood out from almost everybody that they compete against. So really excited about those movements. Me personally, I mean, as we grew up in Shell, we always get excited when our team member leaves. That means you're strong enough to do your own thing by yourself. It's a check, not the other way around. You need to stay in so I can depend on you, right? So it's a happy moment for all of us. Beyond those organization change and some of the movement that we have, I think we're good for today. I don't have anything else to add. Sanjay, Trevor, are we good? I can open for
If
Q&A.
anyone is interested on going on a property tour of Horizon,
yes.
it's going to be on March the 27th from 4 to 5:15 p.m. And the same thing again, if you've never visited a value add multifamily, this is very eye-opening to kind of see what do we do, how do we do it, how do we create value? Because we all know that on value add multifamily, it's forced appreciation. You don't just buy it and think you're going to operate it a little bit better. So I hope you can join me. I'm going to be doing that. And then I believe before that, we're going to do a visit of your property in San Marcos, just to see something about new development. I'm talking very new. The concrete slabs are just pouring some different things. And then I'm going to try to arrange a quick tour of Harris Ridge here in Austin, just so that again you can see we're just finishing the outside groundwork, the shell is there. You just really want to open your eyes to all different types of levels of development so that you can continue your learning.
Thank you, Trevor. Appreciate it.
Trevor, all of this is on March 27th.
No, with the San Marcos is in the Horizon. I have not set a time for Harris Ridge yet.
Okay.
And if it's possible, let's drop those events in our Facebook group. So you can
Okay.
kind of see that you kind of go through. Thank you.
Okay.
Thank you.
Yeah, and I
Yeah.
just if you can get address and some sort of screenshot of what that looks like for the San Marcos property, I'd love it.
Okay.
I'll create
I will send it to you.
a little flyer.
Awesome. Sounds good. It's a lot of activities, a lot of movements. Thank you everybody for pitching in our time, and I'm really excited to see how we are moving forward. And our goal is to get a whole bunch of assets under contract this year as you kind of go through the market. Thank you.
Any other
Thank
questions anybody else have or
for sharing. All right.
comments, questions, anything?
Sanjay, this is Tom. Real quick, you had mentioned hop on Mike's call. Was that later today regarding the capital raise focus?
I thought it
Or
was
Shariah,
Tuesday
yeah.
or Thursday. Yeah, I was mentioning that Mike has some calls. That we are figuring out what calls when is a good time. So if you have the first available date, just hop onto that as you go. I don't think
Yeah,
about today, but if it is, then go jump on that one.
the pro money call that there is a standing call for pro money. Okay.
Yes.
Okay, promo. Okay. Thank you.
I have a question.
Yes, ma'am.
I've taken on Wild Creek Apartments in South Austin. And in the OM, it says, okay, it has been retained to, so it's broker. Offer qualified investors the unique opportunity to purchase fee simple interest in Wild Creek Apartments, 232 unit, 84 vintage garden style. Anyway, what is fee simple interest? Sure, you're smiling. What does that mean?
So it's a title terminologies. So it's basically just says a clean title, no other like assumption or carry from the seller or any other loan or any other like a title stuff sometimes that is needed. So to that question, one of the thing, and I have a friend, not part of any of the real estate groups, went through an issue where he had a clouded title, and he has decided to close that without title insurance, and he couldn't get a claim on the title. So the comment I was going to make was, in United States, just the way the process is set up with title companies, title insurance, and you know what the lenders require, and the overall process, right? We don't even worry or think about, hey, I'm buying this property and paying somebody a lot of or little money. Can somebody come and make a claim to the property and say it was a fraudulent transaction, right? So title companies, to the, you know, their own sort of detriment in a way, have made this process so easy and straightforward for us as buyers and investors. We don't even think about the title, like, hey, person who's selling the title property, do they have the right to sell and transfer the property? But owning the property free and clear is a very big deal. So always, as you do these transactions, always have to think through that. And you know, 2 weeks ago, we had a request for a short-term lending request for somebody was going through some deal. They had a little like a 2-day window. They needed I don't remember, like $150,000. And they said, oh, we'll give you a title to this $900,000 property, lien on that property, and then return the funds 2 weeks later with a great return, right? But there wasn't enough time to get the title insurance, right? So we end up saying, well, I can't do it without title insurance because I have no idea, do they have the right? And will there be somebody standing behind me to say, if somebody comes and challenges that, then, you know, they will say, yeah, here is your money back that you paid because, you know, somebody else claimed the title to the insurance, claimed the right to the title. So fee simple is just that title terminologies, and that's the reason I was smiling, is that I'm glad you picked up on it, because we don't even think about the title and clear title and those things as much in day to day. But of course, when we do the deal, that's one of the big thing we look at is the title free and clear? That's a big question to answer. So
Okay.
good question, Nancy.
Well, here's a more, I want to say simple or physical question. Something in that, so I've requested and had the offering memorandum and the rent roll and the financials sent to get them inputted into our system. And I was looking just briefly, and something in there has me wanting to ask somebody about the water meters. How big a deal is that? It seems to be that I've been learning and whatnot, that it is kind of a big deal if the water is not individually metered by this day and age. What do you think? Can we put in meters, or is that crazy, or what? So go ahead.
Yeah, so most multifamily properties, and even some of the retail and office buildings and stuff, don't have a separate meters. It's redundant, and there's a lot of it's expensive, right? The other question of, is it possible to put separate meters? You know, it's, believe it or not, to find that pipe where the pipe goes in and then finding the space to install the meter. It can be a challenge when you're built somewhere and you don't have the pipe going separately somewhere. But you know, if you have millions of dollars to spend, is it possible? Absolutely, right? You can build and do anything from, this is a simple logistics thing. So it's possible, but usually very expensive, and we don't recommend doing that. And water is easy enough to, you know, meter, you know, just allocate out based on the occupancy size and stuff. So
Okay, good to know.
yeah, and water is easy, you know, number of toilets, number of shower, right? And number of people.
Right.
That's it, right? That's the drives. There is no other big deal on water consumption. So yeah.
Okay, okay.
Mhm.
I would think in the management of the project, then you kind of look for big spikes in leaks. I mean, that has got to be a thing when you're managing, especially now, and especially in Austin, in this corridor that I'm looking at, San Antonio and whatnot, with water supply.
It is a thing. Believe it or not, we're going through that on one of our properties. So that is a thing. And there are ways to figure it out. And the property we're looking at, luckily we have separate water shut off for each building. So not a meter, but separate shut off kind of you can test out and look at things. So
Got it. Okay, thank you.
yeah. Good questions. Very good questions. Okay, any other questions? (9:45), 9:43. If no questions, we'll wrap it up here, guys. Happy Monday.
Thank you, everybody. Appreciate it.
Thank you, everybody.
Thanks. Have a great week.
Goodbye.